What's up, motherfuckers? Weekly recap video. As far as AMC goes, pretty much what we're looking for today, or this week, coming down to the 730 range for our second bottom. The second bottom is now in. It is confirmed. We'll be looking for upside all next week. S&P 500 looks toppy. Did get a double top today, actually, at 452. Looks like that may be the symmetrical equivalent double top we're looking for, expecting downside on S&P 500. And that is pretty much it. So let's just jump into the video and we'll start with SPY. Really quickly, I'll run through this imagery because I haven't gone over this in full in a while. So the blue is the middle, and this is all-time highs on S&P 500 right here. And the bottoming formation of S&P 500 is a perfectly symmetrical move. I've been tracking this for pretty much a year now. So we'll start with the blue box, which is the middle. You have your lowest point there, the middle of the bottoming formation, into the red, breaking below this horizontal line at 380 on both sides, up to 418 on both sides on the dot, you reject, down to 380 on the dot on both sides where you find a bounce, climb to 460, climb to 460, symmetrical equivalent right there. And then you get into the downtrend, the pullback, bouncing off 418, pulling back, bouncing off 418 up to the yellow. Again, that yellow is running straight across, same touch point, same level as everything. Rejecting that down to 410, rejecting that down to 410. This was a little bit lower. All of these landmarks were actually a little bit lower on the right side. And then that 409 bottom that I called there, the run to 450. I said short to midterm, expecting a run to 450. And here we are, pretty much consolidating in the 450 range all this week. Which the equivalent of this move, and I mentioned multiple times, was a bounce up to 458. But being that all of the landmarks have been lower on this side, I said I'm not expecting to see 458. We'll probably top out somewhere a little bit lower, but still we'll be looking for this double top before we pull back to 420, which is the final symmetrical landmark to the downside. And then from there is a climb to all-time highs. So this looks kind of toppy. We did double top today. Honestly, I think the upside's done here. I wouldn't be shocked if there was a few more dollars, maybe $455 to $457 range. But honestly, at this point, I'm leaning that we're going to start seeing downside on S&P next week. The landmark we're looking for is pretty much 420 on the dot, but again, theoretically, all of the landmarks have been lower on this side. It's possible it's a little bit lower than this. It's also possible that we don't have to go down to 420. And the reason being is that this pattern from 460, the lines are not here, but it is a descending broadening wedge here. And this was the breakout. We actually gapped up over it for the breakout. And now we're just kind of consolidating here at 450. No matter what happens, we have to test this trend line, which right now is sitting at 440, more or less, 438 to 440. But it is possible that we break through it a little bit lower to check off this landmark here. As a matter of fact, the macro descending broadening wedge, which is running right across here, this was the breakout. This was the retest right here that bounced right off of the line, found a bounce, and then you crash through it back into the wedge. And then you bounce there out of it, and then you got the climb. It's very possible we get the same thing where there's this line here at the descending resistance coming down to 440 to bounce on that. Maybe you get a little bounce off and then fall through it to 420 to check that landmark off before you climb to all-time highs. Bottom line here is if this was the top, if this was the symmetrical double top that we were looking for, what we're looking for now is one final pullback on S&P 500. Either to retest the wedge or to check off the 420 landmark. It doesn't really matter which case, but we're expecting downside. And then when the bottom is in from that downside, we're looking for all-time highs on S&P 500. This looks amazing. That's it for SPY. Getting into AMC now. And this is, I'm just, again, showing the levels. It's the macro. Same shit as usual from IPO. Your January peak equivalent, your January peak equivalent, your June peak equivalent in the red, the V-shape, and then your macro break right here. Gap down, this pattern, gap down, same pattern there. Then you start breaking down to the downtrend, the wedge. Your first bottom, bounce up in the yellow. First bottom, bounce up in the yellow. Second bottom, bounce up in the green, which is a lower high. Second bottom, bounce up in the green, which is a lower high. Third bottom, third bottom, and that dotted line in orange where you find a bounce is pretty much the exact same level. All the levels are pretty much the same. You find a bounce up to the orange circle now, and then you drop down to the blue horizontal line where you establish support. You curl up towards the end, establish support, curl up towards the end, and then knife down to the flat portion, which is where we are now. And as a matter of fact, today we actually checked off the second bottom of the flat portion. I do have some markers here. The next slide we're going to be zooming in and looking at all of this, but this has been tracking perfectly. Not only has it been tracking perfectly, but we are flying through this. Calculating the speed of this, we're actually moving through this approximately 3.5 times faster than the way it played out in January 2020. So this looks amazing. Absolutely no complaints. Next slide, what we're going to be doing is zooming in on the original flat portion, 2020 flat portion versus the flat portion of the current. I could not honestly ask for better tracking here on the micro. And I'm not really getting into like the nitty gritty micro, like tracking January 15th on a mega micro 1 minute level like we were when we were climbing up. I'm going to save that for when we get the third bottom here. I'll get back into that, 1 minute candles tracking the micro. For now, I'm literally just leaving this up. It just sits on my computer, a 1 hour and a 4 hour, because we're tracking roughly 4 times faster. So I'm just leaving this up and I'm checking off the landmarks as we go. So we'll start over here, the 2020 cycle, the flat portion, bounce off of this red line here, bounce off of this red line here, drop down to the bottom. You actually have a gap right here. These white lines are just indicating gaps. So another gap there, choppy first bottom, a gap up, choppy first bottom, a gap up, and then into the double peak move, bouncing on the yellow line as support, double peak move, bouncing on the yellow line as support, and then another gap down here, another gap down here, down to the cup move on the side, which we got, and then again, another gap down to the bottom. And if you look at the bottoming formation here, it's perfect. Genuinely, this is tracking perfectly, and we are fucking flying through this at a much faster pace than it played out in the 2020 cycle. So this looks great. Pretty much bottom line here is we're looking for upside next week. I'm not expecting anything too crazy, but I am expecting to start climbing back up towards $9. The next thing we're looking for is the tri-peak. So we're going to be looking for a bounce here, pretty much battling the previous support of the double peak move, battling the support, and it's going to be acting as resistance now at roughly $9. You got a few pokes above it for the tri-peak, which will probably be somewhere in the $9.50 range, before one final pullback, a knife, down to all-time lows. This third bottom here will be a new all-time low. Granted, it should not be anything crazy, but it is lower than the first bottom, which the equivalent would be our current all-time low at 705. The third bottom will be an all-time low once again, but it should not be anything drastic. It's one little wick through there. It's possible we don't even get it, honestly. It's possible we don't even see a lower low. Just for now, half the lean that we're going to, because it looks amazing so far, tracking perfectly. I have to lean. We'll be seeing a new all-time low on AMC, likely sometime middle of December, middle of next month. I'm expecting the tri-peak to play out the rest of November, and then probably halfway through December for the entirety of the tri-peak to play out. And then mid to end December, knifing down to your third bottom all-time low, and then the uptrend, and then your squeeze, your macro break. January 2024 always fucking has been price target $1,400. Nothing about the price targets have changed. This looks absolutely fucking amazing. So again, next thing we're looking for is the tri-peak. So we should be seeing green next week, and likely this will take a month to play out. Bringing us to mid to late December, we'll knife one more time down to all-time lows, slightly lower than 705, and then uptrend and squeeze from there. This looks great. All right, so the other perspective of AMC's macro, the first one that I showed with the levels was a logarithmic chart. Now this is a standard chart. Once again, all the landmarks are the same. January peak equivalent, January peak equivalent, June peak equivalent, June peak equivalent, V-shape, V-shape, gap down, and then into the downtrend. And then again, all the levels here are the same on both cycles. And then right here on your fourth touch of the trend, you're knifing down to your flat portion. And that's pretty much it. I mentioned in my last video, we're not going to be getting all of this movement outside the wedge. It's playing out inside the wedge. I just showed the tracking. We're right here right now at the second bottom, looking for the rest of the tri-peak and the third bottom. It's all playing out inside the wedge here. And the reason being is because this wedge, the resistance of it is our macro halt line. Every time we've touched this trend, whether you knew it or not, every time we halted, we were touching this trend. Coming up to it, touching it. This gap up after hours in July, this is a pretty clear indication of what is behind this trend. This was a 100% move straight line in pretty much 1 minute, pulling back, and then we got halted here off the wedge to come down to the flat portion, which is where we are now. Once again, we're meeting this trend, the macro halt line, macro resistance line. We're meeting this trend early January 2024, pretty much a month and a half away. If not, we meet it sooner if we're uptrending into it, but still, I'm leaning it's going to be January just because we have the tri-peak here and then one final knife to an all-time low and then an uptrend and a break of this trend into a straight line, which would be lining up for January 2024, the anniversary of the first squeeze on AMC. And that is pretty much it. I mentioned in my last video, because I know someone's going to say, you know, what if we halt off of this trend again? What if we play out all this movement and then we come up to the trend and we halt off of this again to the downside? If that happens, the price target is 0. You could see all the levels here. It's all the same. 58.65, 58.65, 34.07, 34.07, running it straight across. That's where you knife down to the flat portion on both sides. And then here is the flat portion. 0 is right underneath you. 0 is right underneath you, the end of the macro. This is where we are. And again, this trend is our macro halt line. All of the flat portion is playing out in a very tight range inside of the wedge, because once we break through this wedge, there's no this price action. It's just going to be a straight line. And we're almost there. We're more than halfway through the flat portion already. We are right here. I showed it in the side-by-side. We're at the second bottom here. Are we going to get this gap up for the first peak of the tri-peak? Potentially. Kind of leaning that we're not going to, just because there's not much room to work with here. I would not be surprised if it was just a very choppy uptrend, slow choppy uptrend like this. Just in a smaller range like this, and then down and then break the trend. Again, the side-by-side, you are here, right here. So tri-peak, third bottom all-time low, uptrend, and then breaking the macro halt line to the upside. Price target is $1,400. I believe it's the 2.618 fib or 3.618 fib. $1,400 is the price target. Pretty reasonable. It's a very technical move. I know it might sound crazy in your head, $1,400, but you know, just because something sounds crazy does not mean it is crazy. That is a technical move. That's what we're looking for to the upside. The options are very simple. It's very simple. We either come up to this trend, halt off, and head for 0, or we come up to this trend, break it, and head for the 3.618 fib of $1,400. Very simple. There's no in between. It's 0 or $1,400. I know that sounds crazy, but it's the truth. Now looking at the January 15th side-by-side chart. So this is the first macro of AMC in its entirety. Here is the second macro of AMC, the current one that we're currently going through. So your January equivalent, your June, your January, your June, uptrending for the start of the macro. Your V-shape, and then the gap here. You can see it here, the gap, this little pattern that plays out, which you have here as well, and then breaking down to the downtrend. First touch, second, your second touch, your third touch, and then your fourth and final touch on this wedge before knifing down to the flat portion. So here's the flat portion, which is also right here, and then a squeeze into a new macro, which is what we're looking for once it plays out. Again, the macro V, the January 15th end of day V, is just the flat portion. That yellow horizontal line I had running across really is just the top of the flat portion. So, and again, we are at the second bottom right now. So looking for the tri-peak, the third bottom, and then a new macro, i.e. $1,400. Indicators look good. Back into the indicators again. January 15th side by side up top. So your bull cycle of AMC, your bear cycle of AMC, the flat portion, the reset pattern into a new macro, your bull cycle of AMC, your bear cycle of AMC, your and the flat portion, again, the reset pattern for a new macro, again, looking for a squeeze. Again, the volume profile here looks amazing. January 2021 was all-time high volume on AMC. It was also the start of this macro. And then from there, descending volume all the way through the macro up until the flat portion, the reset pattern, where it's picked up again and pretty much sitting at all-time high levels. Through the entirety of the macro, the green volume, the buying volume has been outweighing the selling volume, the red volume. All the way through this, the green volume spikes have been outweighing the red. All the way through the macro, and because of that, OBV is sitting at all-time highs while the stock price is sitting at all-time lows. So I mentioned the OBV was relatively flat for most of the time, but until AMC became a meme stock, and then it picks up, it legs up in January, legs up again in June, and then from $400 all the way down to $7. It's pretty much just been hovering here at all-time high levels. Descending trend, broke out of it, retested, new all-time high OBV, and we had back-to-back red weeks, so OBV is pulling back currently. We're looking for green next week. We're going to find a bounce in OBV next week as well. That's that, and the RSI is still sitting at 30. Still oversold on the RSI on the weekly. Plenty of room to the upside. Perfect setup here, going into the new macro, looking for a squeeze. Haven't shown this in a while, the Fibonacci spiral. So again, the January 15th macro, the first macro, bull cycle, bear cycle, flat portion is the reset. New macro here, bull cycle, bear cycle, flat portion is the reset pattern. So starting the Fibonacci spiral at IPO, the first touch point you have is the original flat portion here, breaking down to it. And then you get your January, June squeeze, and the spiral is acting as resistance here. All of these touches on the wedge have been halts. So halt here, halt here, halt here, halt here, break out of the spiral, halt, retest the spiral, playing out the flat portion, the macro V once again. And being that there is no overhead resistance of the spiral, we have plenty of room to the upside. My price target, everyone knows, $1,400. I'm not saying that's the top. I'm saying that's when I'll be out, just based off, technicals. Like, we're looking at fibs. Fibs are a thing. They're important, and had you, if you were paying attention in June, you could have probably sold the top at the 3.618 on the dot. The June squeeze topped out at the 3.618 fib on the dot. And the 3.618 fib for the current macro right now is $1,400. I'm not saying it can't go higher. I'm just saying I'm not even going to fucking risk it. I'll leave some runners just in case. And that is pretty much it. We still have time before we start talking about that. So that's that, the Fibonacci spiral. And then lastly, GameStop's macro. I covered this in my last video. Really quickly, I'll cover it again. I'm not getting into the micro. I just want to cover the macro. So GameStop, the macro ends or begins with an all-time low landmark. You can see it right here, and then you V out of it, your macro break into your squeeze. This was not really a squeeze because the volume was very low here, but still, this is part of GameStop's macro. The bull cycle of GameStop's macro took a lot longer to play out here because the volume was much lower than it was here, but this is the bull cycle, the V shape, and then your 1-2 downtrend, very curved to the downside into another all-time low landmark, and then another reset, right? Macro break, and your bull cycle on GameStop. Again, the volume here was through the roof, which is why this played out much faster than the initial bull cycle of GameStop. The V shape, you can't even see it, but it's right here from the top all the way down and then back up. That's your V shape. This move, your 1-2, your 1-2, and then a very curved downtrend, just like this, and your all-time low landmark. Obviously, this is not all-time lows, it's all-time low landmark, where the macro ends or begins. So it's not going to be a new all-time low, but it is still the all-time low landmark. And it's possible the bottom's in. I'm kind of leaning it's not. And, it is what it is. It's not going to be anything drastic, anything more drastic to the downside. But being that AMC's bottom is not in, it's probably a safe bet that GameStop's bottom is not in as well. So that's that. So that's pretty much it for the video. I think I covered everything. This looks fucking amazing. Side by side macro, the flat portion, the gaps look great, touch points look great, movement looks great. I mean, you could really fucking see this here. The second bottom, you get these wicks here. You get these wicks here. Honestly, I wouldn't even rule out a gap up on Monday. Then again, I'm not entirely sure if we do gap up, just because that would speed things up even more. And we still have time until January. So I think it's January, always has been, always fucking has been. So I think the tri-peak is going to take a full month to play out, but we'll see. It's very possible we gap up. It's very possible we just get this uptrend like this, another double top move, just a little bit lower. Something like that, and then your third and final bottom will be a new all-time low, an uptrend, and a squeeze. And likely this will play out much faster than we saw here. It should, actually. I'm almost positive it will, just because we've tracked through this. You know, we're flying almost 4 times faster than the original flat portion here. Looks great. And again, that macro resistance, macro halt line, protection line, whatever the fuck you want to call it, we're meeting at the new year if we're just dead flat here. So again, the options, $0 or $1,400. That's it for the video. I think that's everything I wanted to cover. Next week, AMC looking for upside. Next week, SPY looking for downside. And that's pretty much it. So I'll catch you guys with some updates next week. Enjoy your weekend. Peace.